Well, Alcoa kicked off earnings season earlier this week. I think investors really have been waiting for the bank heavyweights, JP Morgan and Wells Fargo, to come out with their earnings on Friday. Stephanie, expectations are high going into this report. What are you looking to hear from these two on Friday?
Yeah, very high. And I totally expect to see a sell the news kind of thing, particularly because I don't see a lot of upside on the top line, right? I think that these companies are going to continue to do a good job in terms of cost cutting, reserve releases, that sort of thing. But in terms of loan growth, I think that's yet to come. And that's why you can actually get excited for the banks in the second half of the year into 2014. As the U.S. economy continues gradually to recover, you will see, I believe, better momentum on the loan growth side, and also continuation of strength in housing and in general the economy. That's how the banks trade. They trade with the economy. We know the second quarter wasn't great, right? But we do know the positive tailwinds were, again, housing, certainly, and as well as C&I loans. That was actually probably a little bit better than expected. So I want to know if that translates into residential loan growth. And while housing remains strong, the originations and the refis have certainly slowed. That's going to be offset by the servicing. So there's a lot of question marks around housing. I think the net interest margin story is just getting going. That means more profitable business for these companies. But we have to hear what they say. I don't expect these great reports, but we have to hear what they say. If they're more encouraging, then I think these stocks can take another leg higher.
Now, what about the capital requirement announcements that were just made? This is going to impact these big banks. Do you view it as a real negative for these stocks?
Not at all. Not at all. I think that they're absolutely in line with expectations in terms of the leverage ratios being 5 to 6%. And I think that they're going to get to these levels well before 2018. I think the bigger question in my mind is the CSAR, right? So it's like, can they continue to get approval to distribute their cash to shareholders? And that's going to happen every year. And that's what I think these stocks, what people are really wondering is, do the dividends continue to rise? Do the buybacks continue? I believe they will. I believe as the economy improves, their balance sheets are stronger, and then we will see that. But that, I think, is a bigger question mark in my mind versus the cap rules that were just announced this week.
Okay, and then just on the regional banks, you've owned them in the past. You don't own any right now. You mentioned C&I loans. There's strength there, and as housing improves, shouldn't these banks also do well? Is there any banks in that sector that you like?
Sure. So we own KeyBank. That's still a very big position. Wells Fargo is also kind of a super regional, if you will, kind of a quasi. And so those two we own for the very reasons you're talking about in terms of C&I loans, net interest margin exposure, and improvement down the road. The one other name I would highlight would be M&T Bank. I think the company has done a really good job in their efficiency ratios. I think Hudson City, that acquisition, when they close it in 2014, that's going to be a nice catalyst for shares to move higher as they see positive operating leverage.
Okay, well, thank you, Stephanie. It sounds like for the banks, it's going to be a second half story here, so stick with these names.